Bookkeepers for real estate investors, hello. This video is pertaining to how can we begin to vet an REI, vet or qualify an REI prospect, a real estate investor client prospect, right? Is it a number of doors, like rental units, number of properties, number of flips, like a certain revenue marker? And these are all great metrics. And we do use these metrics to price clients. Similar to the Bookkeeper Launches calculator template that they give you if you've taken the course. So we have something similar to that. We use these metrics and a bunch of other metrics to price clients out and price prospects out. But we do not use any of these metrics when deciding if we're going to work with a client, a real estate investor client. So we don't use any of those things. Getting into kind of how some of the things that we ask to be able to vet clients or prospects, it really comes down to, are they willing to accept our systems and processes, right? And if the answer is no, then that's an automatic no for us, right? They are automatically disqualified. And so the conversation kind of stops there because if they want to bring a bookkeeper or even a bookkeeping team into their systems and processes, they need to hire an employee. That's not an outsourcing operation, right? They need to hire an employee because our firm is a company. We have our own systems and processes that we bring clients into, and we have a lot of good reasons for doing it that way. But essentially, if you're going to scale any business, you have to have systems and processes in place so that your whole team is on the same page with how we're serving our people, and from there we can create training programs, which we have, and we're continuing to do. And so if you're making large exceptions for individual clients, you're getting away from your systems and processes, and it creates a less streamlined model. It's very hard to scale a business if you're not running off of your established systems and processes, your standard operating procedures. So how large of a real estate investing company is too large? Just like I said, I mean, as long as they're willing to accept our systems and processes, as long as we have a minimum ongoing monthly client fee or investment. We call it an investment with our clients. So they're paying us on a monthly basis. We have a minimum for that. Our minimum is $500 per month. I kind of, to arrive at that 500, I started at 300 or 400. That was way too small for real estate investors with the amount of work. I worked it up to 600 or 700, I think, and then that automatically turned a lot of investors off. So I kind of found with the people that we talk to and we network with, I found that $500 per month seems reasonable enough to them, but it also makes them respect us. Because, in most small real estate investors' minds, $500 per month is not insignificant, right? That's going to cut into their cash flow. So that's kind of the sweet spot for us. And that minimum has worked very well for us as we've continued to grow. Also, I actually have an intake form, and I usually like to ask my top 3 questions to kind of qualify clients. And I may add a 4th as well, but the top 3 right now are: did you see that our minimum ongoing monthly support fee is $500 per month? Okay. Are you looking for a bookkeeper to communicate with every single day like an employee? And I put like an employee in there because I want that to trigger in their head, like, oh yeah, like I need this person every single day, if that's the case. And so I should probably just hire an employee rather than, look to outsource this thing, because that's not our model, right? And I'm assuming that's not your model either, since you guys are looking to serve many different clients, right? So if they're looking to communicate with one of my bookkeepers every single day, then I'm just going to recommend that they hire an employee rather than outsource. Okay, and then number 3, are you or your team able to collaborate with us on a weekly or monthly basis at a minimum to help us categorize your transactions that need more clarity, right? And this is very important. I dig into this question in the discovery call if they answer yes on the intake form, and we have a bunch of other questions, but these are just 3 I wanted to point out. If they answer these questions appropriately, then I really dig into who on your team is collaborating with us, or is it you that's collaborating with us? How is your team built out? What's all the other things that they have going on in their life, right? So just as an example, If this prospect has, they work a full-time job as a W-2 employee, they also have, a full-on rental real estate business, like 40 properties in there that they're renting out in different capacities, short-term rental, long-term rental, medium-term rental, commercial, all that different stuff. They also have a flipping and wholesaling business. They're also a realtor. And so all of that, in addition to a full-time job, they also have a family, so a spouse and a couple of small kids or something. I've literally, spoken with people like this, and it's like, okay, who do you have on your team who's going to work with us? Because it sounds like you are extremely busy. And if now, I've made this mistake in the past, but now if the answer is, oh, I'm going to collaborate with you guys, I'm going to get you what you need, then that's going to be a no for us, because they're not being realistic, right? What's going to happen is we're going to start working together, and depending on how their entity structure is and their financial account structure is, they don't have the capacity to get us what we need, right? If we have a lot of transactions at the end of the month, midway through the month, and then at the end of the month, that all need to be clarified before we can categorize all those transactions. And they haven't gotten us documentation to be able to do that. They haven't gotten us information to be able to do that. And it's just them and their business, right? They don't have anybody else who can get us that information, and that's not going to be a good relationship. So that relationship's not going to last too long. So we try to catch things like that up front. Getting to the other side of this, it's all about, if they meet, those few criteria that I laid out they have to meet that before we even hop on a discovery call. And so the next thing we kind of want to dig into is what are their goals, right? So I'll give an example. There's a lot of different examples I could get into, but I'll get into a couple. So if the investor is just starting out, maybe they only have a couple of properties or something like that, or their flipping transaction volume is very low, but they have plans to scale, and maybe they work a full-time job or something and have a family, and they're pretty busy, but they're building out a team. They want us to be a part of that team, and they want to go ahead and get the bookkeeping, accounting foundation laid before they scale. And so maybe they're not cash flowing a whole lot right now, but they're willing to pay our minimum, going back to our criteria, right? They're willing to pay us to do this professional service for them because they have plans to, 10x their business in the next year to 2 years. Then it's going to be worth it for them to pay for our services, right? Even though, let's say they only have 2 doors right now. Okay. Also, it comes down to asset management. We have clients who have just a few short-term rentals, but those few short-term rentals gross and profit more than some of our clients who have 30 long-term rentals. Like, not joking. Just a few short-term rentals, depending on where you're at in your market, and how those assets are managed, can actually gross and profit more than someone in another market with different management who has 10 times those amount of doors that are just managed in a different capacity. Okay, so it's hard to narrow down the doors. It's hard to narrow down the profit figures and the gross income figures, just because all of our clients are so different. We have full-time real estate investors who this is all they do, and they have their hands in a little bit of everything within the real estate investing space. They're full-time real estate investing professional, right? And then we have clients who, like I mentioned, full-time job, family, couple other businesses. They're also involved in real estate investing. Maybe after paying us, they break even, or maybe they're even in the negative. But if we allow them to buy back some time, that's all they're looking for, because they don't necessarily rely on real estate investing to feed their family. They have other income sources for that, but they want it professionally managed, so that they essentially don't have to do much with it, and it grows appreciation and all the different kind of money makers within rental real estate and other types of real estate. So it really comes down to their goals. Are they willing to pay for it? Do they have plans to grow, or maybe even not? Like, what is their strategy? Is it more cash flow focused? Is it more appreciation focused? Are they willing to collaborate with us, or do they have a team that's going to collaborate with us? They're not looking for an employee. Kind of, just running down how we qualify prospects in the beginning before we dig deep into all the other aspects of the things that we need to dig into. But hopefully that gets you started. The key to all of this is real estate investors. The industry is so vast with part-timers, full-timers, people who are totally passive, people who are totally involved, a lot of different, revenue ranges and figures and a lot of different goals. So it's very hard to dial in metrics and then market to those specific metrics. And the more you do this, the more you're going to get a feel for who you like to serve and who is willing to pay and what lead channels they're coming through. And so I'm not going to get into, the marketing and sales portion of this, but as you just get started with this, you're going to refine it over time. And eventually you'll have your crystal clear criteria for your ideal client. And it may not include revenue, number of doors, flipping transaction volume, like all the quantitative things that we want to dial in for our market. It may not include those. It may be other factors. But please vet them before you get on a discovery call with them, so you're not wasting either of your time. Even if you only have like 3 points that you want to vet, do it through an intake form or email or however you want to do it. And then just ask them a bunch of questions on the discovery call, and I'll do another video kind of breaking down some of the things that we go through and our structure. But yeah, the whole thing is to take action and get started. So hopefully this has been helpful for you guys. Have a great week, and you'll hear from me soon.